outperformed. Joining us here at Post 9, Alli McCartney, Managing Director for UBS Alignment Partners. Alli, thanks for being here. So Russell 2000 is the standout performer of the major equity indexes this morning, of about 0.9%. And you also think chips will be a key driver to the upside from here. Why is that?
So both have a little bit of the same story in that both are historically underpriced relative to the rest of the both equity markets, full stop, but relative to U.S. large caps or semis to IT. And so when you think about it, so let's start with small caps. Small caps, some people say it's too early. I'd always rather be too early than too late. Look, whether we've had a long conversation, and I think that that Mike really summed it up. But we know that rates are at their higher bound, not their lower bound. And we know that it's a when, not if, right? And so we have an asset class that has historically and relatively underperformed and is very much leveraged to floating rates, right? Very high indebtedness on balance sheets. And so once risk goes back on, and the earnings season has been part of this, which I think has driven the Russell, then you're going to see small caps get back in line with where they should. On the semis, it's an interesting story. So they're trading at about a 10% discount to the rest of the IT space. But whether you look at higher profit growth, right, they're looking like they're going to have, UBS thinks they're going to be about 50% profit growth in 2024, followed by a number that's in the 30s next year. That's almost double the general IT sector. They're also doing a major job at creating additional profitability. And with CapEx disciplines that they have, their free cash flow is going right up. And so we see a huge opportunity there that's not as clouded as sort of the backlog that we've seen, which is the hangover from inventories during the pandemic.
If inflation does moderate, do you think there would be more upside for bonds or stocks at this point in time?
It's a great question. It's basically going to be a catalyst for both, right? And so if you look at the directionality, there's been a huge amount of noise. And I've heard the conversations this morning be about the integrity of the data, the usefulness of the data, et cetera. But no matter what data you use and no matter what you think of the quality of the data, 16 out of the last 18 months have been trending down for core CPI. So again, if you go to the when, not if, yes, are we probably pricing things in too early? Yes, have we gotten over our skis in terms of returns in 2024? Maybe, but both the macro strategy and environment and the micro strategy, earnings, we're forecasting all sectors to be up in the S&P this year, right? Both are pointing at and tailwinds for U.S. equities. And clearly bonds, where the story hasn't been great over the last 3 years, right? The last 3 years, if you look at the ag, for example, bonds have been down 3%. There's been a lot of noise there. But once we get to the point, and every time that we get a CPI, that's directionally right but a little bit noisy, we're closer, then we expect to see a movement in bonds.
Everything you're saying makes sense. I wonder, though, if you think short term, the same story in Europe takes the crown because they appear to be so much closer to cuts.
So there is a little bit of like a spanner in the works with relative global movements here, whether you talk about the U.S. dollar being stronger for longer because we have delayed interest rates more than we think Europe, especially the Bank of England, will. So I do think that there's sort of a relative repositioning, but at the end of the day, I'll talk about my career. In my career, and you can all guess how long that's been, right? The U.S. has largely outperformed. There have always been reasons why that shouldn't be the case, but U.S. large cap is really the barometer of the way people measure the markets and the lion's share of capitalization. So yes, do we see Europe hit highs? Absolutely. Yes, do we have an overweight to UK equities in the value space and defensive space relative to the U.S.? But this AI story, for example, is largely a U.S. story, and that is continuing to drive U.S. large cap.